Hey, what's going on, guys? Welcome to another video, and today we are going to talk about DraftKings, and we are going to analyze the earnings. We're going to talk about the future of the company, and we're going to talk about my thoughts regarding the outlook and whether I think you should still be in this stock. And so let's just go ahead and get right into it. The first thing I want to say is the market is already not fond of unprofitable, high multiple growth companies. And basically, when it comes to these earnings with some of these companies, I mean, we saw this with PayPal, we saw this with Roku, we saw this with Netflix, we saw this with so many companies that just got absolutely hammered. In order for you to please investors and for your stock to not get destroyed after earnings, you essentially have to be perfect. And that's kind of what we saw with DraftKings. DraftKings is no different. We've already been seeing this all year for the beginning of 2022. So I am not surprised to see DraftKings down 17% after earnings, even though they pretty much reported a good earnings. Because like I said, in this interest rate, high inflation environment, growth companies that are unprofitable with high multiples are not in favor. That's it. It's that simple. Investors at this point are looking for a reason to sell, and that's what happened with DraftKings. DraftKings was not any different. DraftKings is in the same boat as all the other stocks that got killed. It's another Cathie Wood stock that got destroyed, unfortunately. And I like Cathie Wood, but that's what people are saying. So let's go ahead and dive right into these earnings. So DraftKings reported better than expected results with 47% year-over-year revenue increase in Q4 2021, and they beat guidance by 8%. That's pretty good. That's pretty good. So let's just go down. DraftKings reported revenue. I'll show you guys what I'm reading here. DraftKings reported revenue of $473 million, an increase of 47% compared to $322 million during the same period in 2020. That's really good. So they're growing year over year. Fourth quarter 2021 revenue exceeded the guidance previously provided by the company during the third quarter earnings conference call on November 5th, 2021 by 8%. We saw that coming because they did not beat earnings in Q3. I remember that because that's pretty much what started this whole thing of the stock tanking. I think they missed revenue by like 40 million, and they blamed it on like strange outcomes or something like that, which basically means that they didn't expect the public to win as much as they did during the NFL season. It was a good year for bettors, actually. Okay. You got here DraftKings. Okay, so no. Let's keep going. Let's go to here. So monthly unique players for our B2C segment increased 32% compared to the fourth quarter of 2020. Okay. So in short, DraftKings actually had a good earnings report. Okay. DraftKings beat their earnings. They pretty much destroyed all of the analyst expectations for all of their different metrics. So let's get to the important part of this video. Why did DraftKings tank? Well, if you want my honest opinion, I think it's this right here. I think this is why DraftKings tanked so bad. So let me just explain this to you guys. We're going to break this down. So they did say that DraftKings is raising its fiscal year 2022 guidance from a range of $1.7 billion to $1.9 billion to a range of $1.85 billion to $2 billion, which equates to year-over-year growth of 43% to 54% and 7% increase compared to the midpoint of our previous revenue guidance. That is really good. Guidance is really important. And you would have thought that would have helped the stock, because that's kind of what these companies have been doing. If your guidance isn't that strong, it tanks. If your guidance is good, typically the stock does well. But right here is why I think the stock tanks. So let's get into this right here. This is what I strongly believe why the stock is down 17%. Because like I said, if your earnings aren't perfect at this point and you're a growth company that's unprofitable, your stock's going to get tanked. So here's what happened. It says here, DraftKings is also introducing fiscal year 2022 adjusted EBITDA guidance. The company expects its adjusted EBITDA loss in 2022 to be between $825 million and $925 million. That's like a $100 million difference. And remember, this is loss. The EBITDA is basically their loss after like taxes and things like that. And so Here's the other part that I actually, will be honest, I did not like, and I think investors caught this too, and that's why the stock is down. So you can see up here, They already told you that they expect their adjusted EBITDA loss to be pretty high. I mean, $925 million is huge for a company like them that pretty much brought in 1.4 billion for the year or whatever it is. That's huge. You know, they're losing almost essentially just as much money as they're getting, and that's not good. So let's look here. This is the tricky part that I think a lot of investors caught on to. It says here, DraftKings 2022 revenue and adjusted EBITDA guidance reflects the launch of mobile sports betting in New York and Louisiana in January 2022. So that's good. They're accounting the new states and the ad spend they're going to have to do in those states to acquire more customers. So that's why that adjusted EBITDA loss is so high. But here's the tricky part. Keep reading. It says here, and our demonstrated ability to engage users and acquire customers efficiently. The guidance does not include the impact of any new state launches after February 18, 2022. That's probably why the stock is down. So investors are like, wait a minute. You're already going to lose a crap ton of money. And you're telling me if you expand into more states, you're going to lose even more money because you have to spend so much money to acquire customers? Yeah, I'm not really feeling this company, especially in this inflationary environment, especially in this environment where the Fed is raising interest rates. Yeah, I don't think I like you guys that much. Sell, panic sell, stop loss. That's literally what you guys are saying. I think this right here is what kind of sealed it for DraftKings. I think had we not seen this or had this little metric right here been a little bit better, I think DraftKings probably would have done a little bit better here. So I guess we could keep going. Oh, they did report something very interesting that I thought was pretty cool, but investors didn't really care. They said DraftKings expects to be contribution profit positive for fiscal year 2022 across all states where we currently live, including New York and Louisiana. That's pretty cool. That is showing some progress. But again, that adjusted EBITDA loss, investors are just like, you know, at this point, it seems like a lot of investors are just done with this company. They're like, yeah, no, we're done. Sports betting is not it, you know. And so let's keep going. It says here, based on all of the states where DraftKings currently live, and if legalization trends remain consistent with prior years, which has been approximately 7% to 9% mobile sports betting legalization per year, and 3 to 4% iGaming company legalization per year, the company would expect to generate positive adjusted EBITDA in the fourth quarter of 2023. Okay, this is important because I told you guys this. This is the reason why I was super bullish on DraftKings. So this is really important. Basically, what they're saying is, based on our numbers, we think that sports betting is going to continue to be legalized in different states going forward. That's the trend that we're seeing. And if that happens, and if we're able to expand into a certain number of states, more than where we currently are, which they're only in like 15 or 17 states, something like that, if they can bring that number up to like 28 or 33 or just something insane within the next few years, that could be very good for the company. And they're telling you right here, if they can do that, then the company would expect to generate positive adjusted EBITDA in the fourth quarter of 2023. That's pretty cool. That's pretty good because right now the EBITDA is what's currently destroying this company. And so if we keep going, DraftKings, following successful launches in New York and Louisiana, DraftKings is now live with mobile sports betting in 17 states. Okay, we already know that. See, all of this stuff we already know. Now, this is important. This I like. So it says here in 2022, 10 state legislatures have introduced legislation to legalize sports betting, and 8 legislatures have introduced legislation either to expand their existing sports betting frameworks, create referendums, blah, 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 blah. 3 states. So that's good. That's good. In 2022, we saw a lot of progress with a bunch of different states introducing sports legislation that would essentially legalize sports betting. Now, unfortunately, I used to work in politics, so I kind of know how this works. Usually when these people release legislation, it takes them forever to get it going through, to actually pass it. Unless it's something that their constituents really care about, it normally takes forever. So now it makes sense why DraftKings put that 2023 number right up here. It kind of makes sense now because, yeah, these politicians, they take forever. Used to work in that field. It was really annoying. And so we could just keep going. Three of the U.S. jurisdictions where DraftKings has the potential opportunity to participate via a market access agreement or direct license. See, I was waiting on them to say Puerto Rico because somebody just went live in Puerto Rico. I'm like, where's DraftKings at over there? But so it says here Maryland, Puerto Rico, and Ohio have authorized mobile sports betting. These three jurisdictions represent approximately 7% of the U.S. population and bring the percentage of the population, blah, blah, blah. Okay, that's good. That's good. Oh, this is actually good. Where DraftKings expects to be offered legalized sports betting to approximately 43%. That's pretty good. That's pretty good. Like I said, at this point, here's what I will tell you guys. I think that management is going to have to figure out some other way to acquire more customers where they're not losing so much money. Because not only do investors not like that, but it kind of kills their path to profitability a little bit. And I think that's what investors are worried about, because you got to understand a company is always going to try and sell itself and make itself look good. But it's kind of up to you as the investor to read through their reports and kind of draw your own conclusions. And I think a lot of investors are drawing the conclusion that, yeah, this company is probably not going to be profitable, or they're not going to be profitable for a very long time. And that's why the stock is selling down so much. So in terms of what I plan to do, let's see, where is Webull trading at? Let's look at DraftKings. Okay, so in terms of where the company is trading at, it's down about 15% right now, so it's not down as bad as it was. In terms of what I plan to do, I am still going to hold DraftKings. I have no plans of selling the company. I still like the company. I still believe in it. But it's also important to remember that DraftKings makes up a very small percentage of my portfolio, literally less than 5%, because I understand what I was getting into. This is a unprofitable company, and it's a growth. So for the investors out there where DraftKings makes a huge portion of your portfolio, I'm just going to be honest and give you sound advice that these other YouTubers will not tell you. You're definitely going to want to cut your losses, and you're going to want to put the majority of your money in more safer stocks, maybe something that pays dividends, maybe a value stock, maybe an index fund, because I'm telling you, I made several videos on this. This is going to be a year where a lot of investors are going to lose money. And the last thing you want to do in a environment where inflation is rising like crazy and the Fed is raising interest rates is have a bunch of unprofitable growth stocks in your portfolio. We all love growth stocks. We all believe in them. I get it. But you got to protect your money at the end of the day, and that's a big part of stock investing that a lot of people don't tell you. They just tell you buy this, buy that stock, but they don't tell you how to actually protect your money. So you definitely want to manage your risk. I'm going to tell you guys this. If DraftKings made up a bigger position in my portfolio, I would definitely cut losses, because I bought this company at $40, and I'm down pretty huge on this company. But because it makes up such a tiny percentage of my portfolio, I'm comfortable with holding it for the long term and just kind of seeing what happens. I didn't see anything in the earnings report that made me bearish. I'm still bullish on the company, but I also understand why investors sold the company too. So, for me, still got a high conviction in the company, still believe in the management, but it does make up a small percentage of my portfolio. So if you're one of those people who's got like all your net worth in DraftKings and you're just depressed and miserable, and every single day you're just thinking like, oh my God, just stop the bleeding. Just stop the bleeding. Cut your losses. Stop listening to these crazy YouTubers who keep telling you to buy all these unprofitable growth stocks, when history shows us that in an interest rate environment, those are the stocks that do the worst. And start switching up that portfolio so you can protect your capital and sleep well at night. It's all about portfolio management and diversification and things like that. So I'm still going to be in the DraftKings company, but if I were a person who had maybe 10% or 15% of this company in my portfolio, I would definitely cut some losses. I'd still keep some shares, but I would definitely trim my position significantly, as, it just doesn't look good. It literally, DraftKings has been a falling knife for the last 3 months. It just keeps going lower and lower and lower. And at some point, you just got to protect your capital. And the way I'm looking at it now is I probably wouldn't start buying this stock again until we start to see an uptrend. I mean, that's kind of the way I'm looking at it, because, sentiment's bad. There's a lot of fear. And then you just had this 17% sell off for a company that was already down like 60% within the last like 4 months or something like that. So it's just, eventually you got to come to your senses and say enough is enough. So I do support having a small position in this company as one of your speculative plays, because I do believe in DraftKings. I like it. But I also want to make sure you guys are safe and you're protecting your money, because I sleep well at night because most of my money is in good stocks and my portfolio isn't down like 40%. But if you're one of those people that's just got all these speculative stocks in your portfolio, you got to protect yourself. So hopefully that helped. Definitely want to see you guys do well this year. Do not want to see people lose money like so many people did last year. And yeah, that'll go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe, and I will see you guys in the next one.